Hi everyone, this is Mike, and today we're going to look at a very simple tax return for Jean Tremblay, and we're looking only at income sources for the moment, so we won't be looking at any deductions, just different types of income sources for a retired individual citizen of Quebec. So here we are with the information for Jean Tremblay. He's a retired individual. He lives in his own home and he's widowed, and during the year he received the following amounts. He received some old age security payments, some Quebec pension plan payments, some pension income from his employer or his ex-employer, and he withdrew some funds from his RIF, his Registered Retirement Income Fund. And he also earned interest and dividends, which were reported on T5 slips that he received from the parties that paid him the interest and dividends. So let's have a look at what those T5 slips would look like. In the case of his dividends, he received them from Bell Canada. So he received $25,000 of eligible dividends, and those are grossed up as per the tax rules in Canada. So the grossed up amount that he'll report as taxable eligible dividends will be $34,500. And they've also calculated the federal dividend tax credit for his eligible dividends of $5,181. He also received interest from Hydro-Quebec for some bonds that he owns, and that interest is a total of $4,500. So let's look at what was asked of you for this problem. It was to indicate what type of slip he would have received for the income that was listed. So for the old age security, that would have come on a T4A OAS, and the QPP would have been reported and sent to him on a T4A P for pension, and his company pension would be paid and reported on a T4A. As you'll remember, employment income is on the T4, but pension income is reported on the T4A. And the RIF withdrawal would have been reported on a T4 RIF and sent to him. So all of these slips would have been sent to him at his home, and that is where this information was gathered from. So we were asked to complete the T1 General and the Schedule 1. As you recall, the Schedule 1 is where we calculate the detailed tax owing, and we carry all of his information and his tax owing to the T1 General, which is the main return. And you're asked to calculate his tax owing as per line 49 of Schedule 1. So let's go have a look at how that would be done. So the first thing we would do is we would report all of his investment income on a Schedule 4. And as you remember, he received $34,500 of eligible dividends, so they're listed here. And he received $4,500 of interest from Canadian sources. So those two numbers are here. He didn't indicate if he had any carrying charges, which potentially could be a deduction of his investment income. So this is the total investment income that we'll report on the T1. So now that we know what his investment income was and we have his background information, we would fill in the first page of the T1 General with his personal info, date of birth, SIN number, etc. Then we would take a look at his total income, and we would report his income sources. So he received old age security reported on the T4 OAS of $6,000, and he received QPP amounts of $7,650. Those were reported on a T4AP. And his other pensions and superannuation, this is a combined amount of the amounts he received as pension income from his ex-employer and the RIF withdrawal that he made during the year. So those two numbers are summed and reported on line 115. And from Schedule 4, we've carried his taxable eligible dividends, and we've carried his investment income. So that adds up to a total of $93,126 of income. And we're not looking at any other deductions for the moment, so we're reporting $93,000 of taxable income, which we will carry over to the Schedule 1 to calculate how much income tax he owes federally. So here we are at Jean Tremblay's federal tax return Schedule 1, and for the moment we are not considering any deductions. At this point in the course, we're not concerned with deductions. So we're going straight to his income tax calculation for the tax that he would be owing. So on 93,126 of taxable income, which we carried over from the T1 General, we're calculating that he owes 17,620 as per the marginal tax calculation method used in Canada. And that gives a total tax owing of 17,620, from which we subtract his federal dividend tax credit, which was indicated on the T5 for the dividends he received. So the 17,000 less the 5 gives us that he owes 12,438 of basic federal tax. So we'll carry that back to the T1 General. So here we are back at the T1 General on the last page, and we've carried over his 12,438 of federal tax owing, and we've not indicated any other deductions for the moment, but he is entitled to the 16.5% refundable Quebec abatement, and that is an amount of $2,052. So his $12,000 federal tax owing less his rebate, and he gets $10,385 of tax owing to the federal government. So that would be reported as a balance owing on his tax return, and he would have to pay that to Revenue Canada. So this is a very simple example with excluding any personal deductions of different sources of income, how the tax owing is calculated, and the net owing, how it would be reported on his T1 General.